Hey, I appreciate you taking part of your day to watch this video. And here I'm going to talk about island reversals. And it's actually a pattern that I don't mind too much. I don't find them very often that suit me, but I kind of like them, and I'll tell you why. So what is it? It's actually just a reversal pattern. It actually uses two gaps in the opposite direction when it forms. What does that mean? So let's find a market that's trending. So you want that first gap to be in the direction of the main trend. So in this example here, a gap up. The second gap after the island is in the opposite direction of the main trend. So now we want a gap down. Now you could look at volume increasing on both of these gaps if you'd like. Some traders use volume, some traders don't. I don't think you're going to find much of a difference either way. Okay, right here, our first gap had some high volume. The second gap was no big deal. But then this market trended to the downside, right? So you have to decide if volume is going to be important to your strategy. For the bullish pattern, it's called the island bottom. So these patterns can actually be the first sign of a new trend forming, right? So in effect, you'd be actually catching the trend at the peak time at the reversal, if it works out. The abandoned baby pattern looks a little bit like the island reversal, but there's a difference, and some people confuse the two. The difference is the abandoned baby is a 3-candle pattern. The second candle is usually a doji, okay? And I'll be honest with you, there was a time when the market was huge, where people were selling candlestick books and all kinds of stuff, right? It was big business. And in the books, they made it look like these patterns were infallible, right? That you needed to see a perfect pattern setup. There's like 100 names for patterns. But in the end, right, you just want to look for the meaning of the pattern, right? It doesn't matter if it's a perfect formation, right? Close is close enough. Now, you may not agree with me, okay, but for me, the best looking island formation, price is an obvious trend. So the first gap up or down is going to occur, and there's no overlap of the price points, okay? So after the gap, there's no filling of that gap. You'll see a series of candlesticks that make up the actual island. And again, the second gap, not going to fill. So why do I think that's the best? Well, when I look at multiple candlesticks for the island, it reminds me of a trading range. And a trading range is when the market is more or less in balance, right? And you've probably heard the theory that the bigger the brick, meaning the longer the range is, the bigger the break, which means the breakout of this range will generally start to trend. So if you think about that, inside that range, buyers and sellers are having a bit of a battle, right? The buyers are accumulating positions, and if they do win, that second gap is going to happen in the opposite direction, right, to the upside. That's strong. Now, I don't have any hard data, okay? It's my theory from my years of looking at the market and traders that I know, right? We're going to be looking at a lower probability of that second gap being filled just due to the amount of time of that range consolidation. So how do we trade them? You can add another indicator. You can add RSI for oversold or overbought. You can use a moving average to help you out with trend. I'm not going to cover all the different indicators you can use, but you don't have to trade this pattern in an isolation. So how would you enter it? Let's look at a bullish reversal. So we want to see price in a downtrend. We want to see price gap down and no overlap of price. You want to see multi-candlestick base form, and then you want to see price gap up from that range. And you would enter on the opening price of the candle or use a lower time frame to find a pause in price to enter. On here, we have 4 days of consolidation after the gap down. Price gaps up, and you can enter at the opening print of the day. But is that the best way? Well, there's no best, really, right? For each trader, it's going to be different. So if you're a trader that can spend a few hours in the morning, you can watch a lower time frame, right? That's a 1-hour chart up there that you can enter off of. You could also consider using the opening range breakout strategy along with the island reversal pattern, your protective stop. So the general approach is to place your stop at the extreme of the island reversal formation. So for a bearish island reversal, your stop would go above the high of the island. But there's going to be times when that second gap is wide and that price level for the stop, it's too rich. So in that case, consider using a lower time frame entry and stop loss. As you can see in that inset chart, your stop will go below that range base. Because if you enter at the opening of the day, The only location you have access to is the extreme of the pattern. So if you go down to a lower time frame, let the day evolve a little bit, you're going to find some structure. You can talk to your stop behind. Minimum targets for profits. I always hate saying minimum targets because really the only thing we can control is where we get out for our stop, right? The profit target is something that is not definite. Anything can happen, right? Look, it's great to have a minimum goal, right? Your reward to risk ratio. But you got to be open to trade management because it's not always going to happen. So we can use a pattern target, and all you do is take the width of the first gap, project it from the entry price. So this example here has a $6.68 price gap. The profit target is the same amount from the end of the second gap. So your entry. Now the island reversal is not complicated, right? It can look different ways, but there's some keys to keep note of. The gaps up or down cannot have an overlap with the island candles, right? So that'd be a gap fill. We want to see a pure gap. Now you can certainly trade one candle islands, but my preference is looking for a trading range type of island. Your trade entry can be at the open or a lower time frame if you want a more precise entry. Profit targets, width of the first gap to the extreme of the island, projected from your entry price. Stops are from your entry to the extreme of the pattern, or a lower time frame structure, which is my approach. And I got to say this again, one big takeaway is that we are not trading the actual candlestick pattern. Okay, we're trading what this pattern means. Okay, that's one reason why I prefer the island to have multiple candles, okay? Because there's an actual accumulation or distribution taking place. And when it breaks, I could be just getting onto a new trend. It's that simple. If you have any questions or comments, pop them below. And as always, I respond to most questions. Hope you hit subscribe, and we'll talk to you soon.